What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for April 25th, 2023. So that sounds like something you're interested in. Consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So today we got some interesting news as far as manufacturing data. It had quite the impact on the market. The market started selling actually pretty heavy this morning, but as you can see, the market is rebounded today and is still flat and essentially kind of just going sideways from where we've been for a little over a week going into earnings. Again, some individual stocks are moving. The index is not moving at all. But again, we are coming into essentially the Super Bowl of earnings this week. We're going to get a lot of industry leaders over the next couple of days. And then not only that, we're going to get to monetary policy and non-farms next week. So we have to understand that non-farms are very lagging, and a lot of the jobless claims have been really bad, atrocious actually over the past couple of weeks. I understand there's a lot of leading indicators. Manufacturing data today, again, showing a lot of weakness and showing recession-like numbers. And so with that being said, again, there's this lagging indicator, and the market really doesn't make a move until it starts reflecting that in non-farms. And the question is on what non-farms is there going to actually be the reflection of a recession? Now we are starting to hear the Fed, right, talking about a mild recession. And you're starting to hear more echoes of it now because the data is starting to reflect it. And so, like I said, I think there will be this more united front come next week when we start, when we get monetary policy. But to get there, again, we have a lot of data coming out this week, and we have UPS. It's essentially the heartthrob, essentially the pulse of the U.S., and a lot of the different products that being sold. So that is important to watch that. That was a big indicator last year as to what we were about ready to see, especially when it came to around Christmas time in earnings, essentially. And the thing that's kind of really messed up is a lot of these analysis are saying that things are just fine and dandy in the market because they're hitting expectations. And something I've always talked about is expectations are in the dirt. And if they miss, they're missing by a lot. And so being said, these earnings is going to give us, like I said, great insight. A lot of them, one of the biggest ones we're watching, I am recording this about 20 minutes before the bell closes. But one thing to really keep in mind here is that we have some big earnings coming up. Today after the bell, we have First Republic. So that's going to be in about 20 minutes. We're going to see what First Republic, again, they were one they thought we were going to lose, right? You had a bunch of the bigger top 5 banks put large deposits into First Republic to essentially kind of save it. And then not only that, tomorrow we open up with Verizon, UPS, McDonald's, 3M, General Electric, and then close with Microsoft, Google, Enphase, Visa, Chipotle, right? There's a ton of them that are essentially getting essentially releasing earnings just over the next 24 hours. And so you even got Whirlpool tonight as well, which is a big one as well. Like the insight with the Whirlpool is pretty interesting too as well, because it kind of gives you insight into people buying homes, right? If people aren't buying new homes, right, Whirlpool's not going to do very well. And we've seen a lot of that with the new building permits and housing just in general. People just aren't purchasing houses because it's ridiculous almost to get a house or get a loan to be financed for a house. And something I want to kind of talk about that I don't even know if I touched on it, but they are trying to, essentially the administration is trying to pass based on your credit score. They're trying to get incentives for people that I don't know what exactly the drop date is. I think it's like below 650. So if you essentially have below 650, you can essentially get credit to get a home, where if you have anything over that, you have good credit, you're essentially penalized. And so this couldn't come at a worst time. And something I'm thinking into this thesis is that people are in dire need, especially if you're a real estate agent. Things are really bad as of right now, and they're getting worse and expecting to get a lot worse. And so I think right now what this ploy is to provide more liquidity to take it off of potential companies that might come in and start flooding. There's something I talked about, right? You aren't going to get a housing crash unless there's a flood of supply. Right now, what we're seeing is there's just not a lot of supply and not enough demand because, again, people aren't selling because it's just too expensive to find another place. But not only that is people aren't there isn't enough supply or people being able to get qualified to go out and purchase a new home either, because their purchasing power has gone way down with interest rates climbing up. So if they pass this, right, and then know that people that essentially shouldn't be purchasing a home because maybe they can't afford the payment, or it's going to take one bad life event, which could be potentially getting laid off, which is a strong possibility over the next couple months, because we're going to see a lot of layoffs the next couple months, not just in the tech industry, and then realize that if they miss a payment, then they're going to get foreclosed on. But essentially, that would be under somebody else, and potentially not even these big corporations that hold a lot of supply. Now, this is something I've brought up before, is that BlackRock has a lot of supply of houses. And if they want to liquidate, they need someone there to buy it. And so how can you liquidate if it's hard to get money? So why not just give it to people that are already lending and defaulting on loans? So just helping them out so that they can essentially pawn that off. That's not saying that's true, but that is my thesis on what could potentially going on and why that was even brought to the attention when I was just trying to get liquidity. So it was off the corporations and onto these individual families that will claim bankruptcy or whatever the case is, and so in default. So and not on these corporations. And so that's where my thinking is, because we've had a lot of really ridiculous kind of policies just come through on everything. And something you really need to understand, right, is people like to be led. And sometimes a lot of people will overstep that when that happens. And so with that being said, what's going on here is we're slowly giving up essentially a lot of rights on stuff, right? And I don't want to get too political, but if you do not see the moves that are currently being applied over the past couple of years, you're slowly getting conditioned to believe that you will owe nothing and that's okay. And again, I think the passing of this is what it's going to do is just going to harm the individual, as opposed to take the responsibility off the business and the corporations that are holding, again, like I said, a huge amount of properties as of right now. So that's just another thesis I think could be potentially playing out there that could lead again to more deflation if when you get a bunch of people that are defaulting. Again, you also got a bunch of commercial buildings that are coming to maturity. It's something else we've talked about. So you have a lot of different aspects, and I keep talking about this. There's a lot of different ways this can go, and this is why I don't think we see a pivot yet, because now we're just starting to see recession numbers after they told us we wouldn't get a recession. It was going to be a soft landing. Not to say that I don't think we can't explode out of any kind of recessionary situation, but I think, like I pointed out in the weekly update, I think you're going to see a move much like the pandemic, where you're going to get potentially two solid months of just pure selling to price in a recession, and then at that point, the market could rebound and essentially rebound right off of that, essentially lead into quantitative easing at some point next year, right into election year. And so I think it's, again, a very strong possibility, but we have to see what the case is with that. So again, this week is more so focused on what earnings has got, focus and see what other, there's not a lot of data. There is some data, but like I said, a lot of the data, I wasn't expecting the data today to have a lot of impact. As you can see, it really didn't. It had a short-term impact. That's why I talk about impact, the data that has impact, right? Is even though we sold off, we bounced right back, because it's not super impactful. Yes, the data can have, moves intraday, but aside from that, it's not going to have a dramatic impact, right? These are warning shots. These are your warning shots that we got today, the manufacturing data. That stuff is really, really bad and pointing to recession, but it's going to be something bigger than that, like non-farms reflecting a huge drop, right? Or Powell saying something, right? Those kind of events are the ones that make it pivotal and make these moves a lot bigger. So that is something you have to understand. So with that being said, we will wait and we'll see. We'll see what First Republic has here in a couple minutes, and then, like I said, tomorrow we open up with a lot of big hitters, and then even tomorrow, every day this week is right after tonight. You're going to start getting big hitters, big industry hitters, and then you're going to be. These are the eye-opening moments that could potentially start selling off the market. I think what the market is doing is just holding until the end of next week, maybe just until next monetary policy and non-farms. I think it's ultimately holding till non-farms. So I think people are the market's expecting a 25-point basis move. I don't think that will defer from there. The only thing I think could defer or scare the market is if Powell comes on and says recession. Even if he says quote unquote mild recession, which isn't no such thing as a mild recession, but that just means a lot more layoffs are coming, that things are going to get a lot worse. And then now you're allowing people that can't afford hardly anything to just start purchasing houses. And that's just not a good combination. You're really asking for a lot of trouble for that to happen. So, and again, now is not the time to be buying, in my opinion, right? I think you got to let this bigger half of everything play out. Again, none of this is financial advice, but I think you got to let this thing play out. Once it plays out, then you can take position from there. But again, we'll see. We'll see what happens going forward. Like I said, it's again a very interesting situation. So SPX, like I said, it's been super choppy. I don't think we're going to there might be some news this week that could break us down below. We're kind of looking to see if we can break below the 4,100. If we do, like I said, I think we're going to come back down to 3,800. I don't know if the news this week will do that. It's a very strong possibility that it could. You have to be aware there's a very strong possibility that it can. Because if, again, a lot of these companies your Microsofts and Amazon start reporting, Google start reporting recession-like numbers, like massive, like down numbers, that could be a huge suggestion that we are in a recession, right? And realize that the recession numbers are very lagging on a lot of things. So again, we'll see what happens there, but bulls, you want this thing to break out, or essentially over 4,200, right? I know we didn't touch 4,200 this time, but you definitely want it to break over 4,200 if you want this thing to continue. Again, it's already been very parabolic. I think we've had our earnings run over the past month. Now we're just chopping, waiting for the next news to sell us back off down to 3,800, depending on if we get a lot of recession talk and stuff during that time, could lead us to a new low, but ultimately we have to wait and see. So Bitcoin's kind of been dropping since the weekend. We'll see if this thing continues coming down. I think it's kind of hit its top, in my opinion. Again, I think it's not going to detach from the market. I think we have, like I said, that one big move down. Let's price in a recession and then take it from there. And I think everything at that point would be a good buy time during that time, which I'm more thinking it's going to be around June, potentially, maybe even May. We just have to get through earnings, and then once normally that old saying, sell in May and go away thing is very much a possibility, right? Because liquidity is pretty much gone around the time. There's a lot of people just out, people take vacation, everything like that. Nonetheless, I think it's a very strong possibility that we play into that, and then by the end of the June, we could recover and then start pushing back up. I don't see us doing any kind of quantitative easing aside from reducing rates. I think if we can get a quote unquote crash, that would provide the disinflation that we needed. But again, it's all depending on timing. And then we could get our cuts at some point this year and then go into actual potential stimulus checks next year, which is crazy to think, but I think it would be a strong possibility because I think what's currently building up could cause so much damage that you would potentially have to shoot checks back out, right? And I don't think it's going to be like it was before during the pandemic, but essentially the people that would need it would be able to get those checks from that point. So again, we'll see what happens here, but moving forward, I think very much a strong possibility what's currently going on. So we'll see what happens with Bitcoin here, but support here, essentially it's 24K mark, but it does need to break out over the 31 for this thing to keep going. Gold, let's check gold. Gold, again, very strong. Recession type gold. This is recession gold. When you get pumps like this in gold, worries and concerns about a recession. Tesla had some pretty heavy selling, but it is still kind of holding support here roughly around the 160. It does break clean below this 160. You're going to get a gap fill at least down to the 140. This is kind of where I'm looking at. And it will start accumulating anywhere from here down. So this is kind of really what I'm watching. So let's see what happens coming into tomorrow. And then essentially go from there and see what happens. But Tesla, again, one of the best companies, I think, out there. But we'll see what happens moving forward. Again, just rough times, like I said, and I think they can recover very quickly, even though they're reducing prices. I think that the biggest thing with them is just ultimately that they're also bringing down the price of production, which a lot of companies don't do that, right? They just take all margins and just that's what it is. So, and you also got a huge gap fill up to the upside as well. Tesla could potentially try to retest the 170 here in the next 2 weeks. If we don't get bad news, then if not, this thing is it's gonna break either way. It's gonna gap either up or it's gonna gap down. So we'll see what happens in the next couple of days. Because if we get a lot of bad news, this thing is definitely going to start selling off pretty heavy. But we'll have to see. The market might be waiting for. Market's definitely going to be waiting at least for Microsoft, Amazon, but more so Apple. And Apple doesn't even report till next week with monetary policy. So keep that in mind. That might have been a reason why they positioned Apple further over to next week, just in case Apple does report something bad, the market would start selling into that. So if they can align Apple with monetary policy and non-farms, if we get a whole bad week, if we get 3 strikes next week, that could be what it takes to price in a recession potentially. So I'm thinking next week it's going to be a big week. I'm not saying that this week isn't going to be a big week. There's a lot of potential that this week could make some big moves in the market, but I think ultimately we're waiting for if we can push anything off till next week. I think the market's kind of looking for that, although I do think we can break down this week, start the selling going into monetary policy. We kind of already know what monetary policy is. I think more so what we're looking for there is what Powell is going to say. So we'll see, but ultimately Tesla again can gap either way there. BA again, it's just this guy, a lost guy, no man's land. It just sits here in the middle of nowhere. Again, needs to break 220. 193 needs to break down. So kind of really watching to see what it does there. JPM, again, it still can't break the ceiling here at the 144. I think this thing does turn over and start selling pretty heavy. It's going to fill this gap here. So I see this at least coming down to the 123. It's got 2 gaps now. I've talked about this gap here before, but now it's got a new gap. So you're going to get one gap fill here, another gap fill here. So I think that would pretty much be enough to start causing the market to sell off pretty heavy. Just in general, Goldman Sachs broke, retest. Let's see if it could flip back over and start selling back to the 320. Bulls, you want this thing to break back over essentially the 347. We'll see if that's a possibility. Bank of America, break, retest roughly right here at the 30 mark. See if this thing rolls over and starts selling. Again, a lot of things aren't looking very sharp. A lot of things are very, very overextended. So don't keep trying to push this thing out as much as possible because that is definitely not a good sign. We will look at First Republic Bank here. So this is kind of what we're going to watch here in the after hours a little bit as this thing goes. I got about 5 more minutes. So I think the biggest thing moving forward is to ultimately just be paying attention to, again, the earnings are going to be very pivotal this week. And I think can move the markets. Now, we've had many times throughout the past with earnings is that Amazon and Microsoft have done really bad, and then the market just kind of held to get through earnings. Like those individual stocks, they had a huge gap down, and then they just kind of held, and then the market waited for the remainder of essentially the big tech earnings to finish, and then we started selling off at that point. Something I've stated and always talked about is you're going to have like 3 to 4 weeks after essentially after that company has actually reported earnings, that they essentially start selling off after that, and they start dying down so that they can essentially get to a point to where they can consolidate and then get ready for the next earnings run. So it takes a while for that to happen. That process takes a while, but essentially the 3 to 4 weeks after the reporting earnings, you will see a lot of selling typically in that stock, just to kind of cool off a little bit and then get ready for the next earnings pump. But again, a lot of things are lining up to some potentially really bad things that could happen here. So we are really definitely trying to see what's going on with that. But nonetheless, we will see. We got about 4 more minutes here. I want to see what's going on with First Republic. Again, First Republic was one of those banks that we had the SVB fallout, we had Signature Bank fallout, and then First Republic was one of the first banks that came up and was saying that, hey, this is going to be the next bank to go. And then, like I said, you had I think there were at least the top 5 out of the top 10 banks deposited money in there. They had about 30 million, essentially, 30, maybe it was 30 billion. I think it was 30 billion that was deposited in there from these big banks to try to keep this thing afloat. And then now we're at this point to where you lead with your best banks. So their top 5 banks was just a week ago, not last Friday, but the Friday before. Then you had a lot of other banks, and you got a taste of some big tech last week. Now you're starting off this week with First Republic, and then you got you're going to start hitting a bunch of industry leaders first thing in the morning, and then tomorrow evening, and then Wednesday morning, Wednesday night, Tuesday morning. And then, like I said, you essentially finish with oil by the end of the week. And that could be a real big issue, especially with OPEC and them cutting production. And I think that doesn't even take place till May. So you won't even see the impact of that. And we're already starting to see gas prices. I don't know about you, but I'm already starting to see gas prices that are starting to creep up. And so if that's the case, we might see a huge spike of inflation. And that's the last thing you want, is a huge spike of inflation, because that means that the Fed might actually have to do more than 25 points. And if they do that, we've already broken banks. So, if you jump up to a 50-point basis move, you're definitely breaking something, and very quickly. But also understand that it does take some time for that to play out. And like I've stated with this whole recession talk and everything, it's taken a lot of time for that to even occur, right? And understand that the recession, we had to have this whole back and forth with inflation and non-inflation, and then we're going to pivot, and then we're just going to bounce right back and keep pushing. But that's not the case, right? We went 2 solid years of just straight pushing, to literally all you had to do was just buy the dip, and the market was just pushing up. And it was a very crazy time in history. And understand that that's not a regular market. Now this is repercussions of that. And then we need some huge disinflation. We need normalization, right? There's no way about it. We need normalization so we can get to prices to where people can afford to live, right, without having to work 3 to 4 or 5 different jobs. Understand that because a lot of different things, and understand that because of not only just the man working, now you have the man and the woman working, the husband and the wife working now. So that's 2 incomes. So now everything is just, the pricing and stuff of everything is just out of control. And so we need some sort of normalization to be able to help that. And we need a crash, right? We need that more so. And like I talked about, a recession is 43%, and we've only hit roughly, I think, almost 30%. Just over last year, at the bottom of last year, which I think was around November of last year, coming into this year. So again, we'll see what happens. There's still a lot going on. It's a very crazy time in the world, and I hope everybody out there as well. But we got about 30 seconds here, and then we're going to see what First Republic has. Again, I'm very interested to see what happens here. These are the zones I have here. We'll see. We got rejected here once up at the 16. You want to check out the daily here real quick, about 19 seconds, huge gap down. Again, they thought this was going to be the first one to essentially, this is going to be the next one to fail, and then after the deposit. So I think this is going to be really good. We got about 7 seconds. Let's see what this bad boy got. Oh, man, I don't know. We'll see what happens. Let's see if this next candle just absolutely gets plummeted here or not. But maybe not. Maybe it does really good. I understand that, again, you also had a lot of huge banks do big deposits in here. So maybe it's going to make all-time highs on its essentially on its numbers, right? Because you had big banks helping them out, right? And so maybe that's the case. I think more so what you're going to see here is people want to get on that call, right? The numbers might beat here, but ultimately we want to see essentially what's going to happen on that call. If they say something really bad, is what's ultimately going to matter. I'll put this up real quick. We can kind of see what the numbers are when it comes out. Yeah, so we're already starting to see it push. So my guess is that it's done really well, and obviously probably hit numbers out of the park. Of course it is, because you got big banks depositing huge amounts of money into it. But the thing is here, see, if it can hold that zone is the question. And ultimately, if it can't hold that zone, I think ultimately could potentially start crashing down, especially when the CEO comes on and they give their earnings call. I think that's what people are more concerned about. They don't really care about the numbers. I think the numbers are probably very unbelievable at this point. So we'll see what happens. Probably get in about an hour, and there it is. Look at that. Oh, there it is. There it is. There it is. This is what I'm talking about. Let's see what the CEO comes on and says. This could be a very long night nonetheless. And that's what I'm thinking, is that, people are probably, that's what I'm saying, is there's some numbers. Of course, you're going to get some good numbers because of the large amount of deposits from JPM and all them, Bank of America. Again, question is the health of this bank, First Republic. Again, if there's any negative news on this bank, you could potentially start drawing more negative news and bank runs after the fact of what's happening here. Although I'm not really sure about the bank runs anymore, only because of the fact that I think a lot of people have already shifted their money around. So you're not seeing a lot of shifts in money anymore. And some people have actually pulled out a lot of money. And I think that's where we got a lot of buying, a lot of demand from, is people are purchasing assets in case something does happen to the banks. In case something does happen, people have a physical asset to potentially help, even if the dollar goes under, right, with BRICS and everything. So we'll see what happens there. But definitely fighting here. We'll see. Again, I think we're waiting on that conference call ultimately for this. Obviously, there's something that people didn't like why it went down like that, but we'll see. We'll wait and we'll see. But as of right now, I don't want to make this too long. Just initial preliminaries. We'll watch and see what happens here. Definitely keep an eye on this overnight and see what happens. Again, a conference call is really going to matter. Aside from that, have a great day, and I'll see you guys later.